Hey, it's Jason Wieloch with the Wieloch Group at Compass, and I'm here to talk to you about the state of the market in Atlanta and really real estate across the country and how all of this is creating a lot of questions going into 2023. And we're going to help you be a little less concerned about some of the things you're seeing in the media. Atlanta is uniquely positioned. It's been named recently by a number of publications as a top 10 market in terms of upside for 2023. And there's a few reasons for that. If you're looking at the major large markets across the United States, we have one of the most diverse economies. We're still considered one of the more affordable markets, and many of the cities across the Sun Belt, the southeastern United States, fit that MO. And because of that, you're going to see less I think cyclical dips here as opposed to some of the coastal California or Northeast markets as we go forward. So according to some of the stats we're looking at, you could see a 5+% increase at any of these top 10 markets across the country. And you're also going to see a continued influx of population because folks are coming from these other traditional markets to Atlanta pretty consistently, and that's not going to be stopping in the coming decade. Interesting topic, interest rates. In all seriousness, though, rates were historically low for the last couple of years around the start of COVID-19. And the idea that 2.5% to 3% interest rates was going to be something sustainable, nobody in our field ever felt that was going to be the case. So the increase in the cost of a mortgage is not a surprise. And in fact, when rates were at 3%, you would see 20 offers in 24 hours on a property. And that's really an out of balance market when it comes to supply and demand. So moving towards a more balanced market where buyers and sellers have more of an equal playing field is healthy for the long term. And the spike in rates is only going to be temporary because inflation is something that the federal government is trying to fight. They're doing so. And we're already, even in the last part of 2022, seeing rates cool slightly. And most of the experts that we listen to believe that they will stabilize this year. But that's really going to be the foreseeable future. My advice for anybody who wants to make a move, whether it's out of necessity or discretionary, is that timing real estate markets, just like timing the stock market, is impossible. And in the last crash of 2008, 2009, when I entered the business, many people waited that out as well, and they tried to time it, and they also, maybe waited too long. So it's impossible to know whether markets will go up or down in any given day. What we do know about real estate this time, though, is that the fundamentals of how people obtain mortgages is strong and secure, unlike 2008. And the fundamentals of supply are way lower than in 2008 when we had an oversupply of homes. So rates are the only thing dictating prices right now, and predicting or waiting out the real estate market is likened to saying, I'm predicting interest rates. I would invest in Atlanta in 2023 because, in spite of interest rates, there will be a very, very strong future for this city. The economy is super diverse. People are moving here from coastal markets across the US. There is so much opportunity. We have the largest airport in the world. We have a hub for many Fortune 500 companies, and it ultimately will not matter what rates do in the short term over the coming months. You're looking to invest, in my mind, in a long game in the future of this city. And 10, 20 years out, Atlanta will have millions of more people across the metro area. And I don't think it's hard to foresee a future in which you won't be happy with such an investment.